Okay, subscribers, welcome. Thank you for joining. We're going to go through the technical analysis of the stock market charts. I'm going to point out a couple trade ideas, a couple ideas that are really working well, and we'll get right into it. So, triple Qs, couple things. I want to start out here on the monthly chart. I just want to point out the bigger picture. This is your bull market really in tech, and this is going back to 2009. And you can see here that we've been in this upward channel up until just recently where we've had what looks like a blow off top. I mean, from this perspective, that's what it looks like. Now, we do have a couple things that are starting to play out, which is negative divergence on the daily time frames and some of the other time frames. You can see here on the monthly, we've had negative divergence on the monthly, really going back to 2018, is really where we put in that negative divergence, and that's continued to build. So on the monthly, negative divergence continues to build. It's not a sell signal. It's not a reason to necessarily get to short stocks, but it should be a heads up that the trend is starting to lose momentum. We're also on the upper end of this rising price channel. Usually these areas are the blow off top areas where you just have this is the ending move essentially, and then you're going to come down. We can go higher. Doesn't mean we can't just continue to launch parabolic, but probability says we actually come back down to the downside. Let's look at the weekly here. You can see here we have negative divergence here on the weekly now on triple Qs, and we just got it as of today. So you can see it's right there where we have a new higher price. Let me zoom in. See the higher price right there, just a marginal new high over the previous high, yet it's done on less momentum. See the momentum right there? Now, if we continue higher and momentum continues to build, we can burn through the divergence. That's completely possible. So again, divergence, even though it's there right now, doesn't mean it has to remain there. We need to wait for a sell signal to short. However, because this is a divergent high, that indicates there's a higher elevated probability that we will get that sell signal. Let's look at the daily chart here on triple Qs. Triple Qs now, you can see new marginal high over the previous high right here. Now this could be considered a breakout because you are breaking, above the all-time high in Qs. But you look at the volume. Here's your daily volume. Now the day's got a couple hours, but this isn't breakout volume. So again, I'm not seeing confirming volume on this breakout. We have negative divergence on the daily. You can see it right there, and that is an elevated probability that we get a reversal. So we wait for that reversal. If you're long, you can stay long and just wait for the reversal as well. That is perfectly viable. I'm not long, so I'm not going to get long. I'm going to wait for that reversal. If it doesn't come, then we'll wait for the divergence to get burned through, and we'll wait for a better setup. But as of right now, everything across multiple time frames in this tells me that we are, this divergent high right here has a high probability of failing. If I go to the hourly chart, you can see here on the hourly, we also have negative divergence on the hourly right there. Much higher today, and we'll burn through that on the hourly. So we'll have to watch that. But if it turns down around here, then that will confirm that hourly negative divergence. The sell signal that I would wait for personally is one, you want to break back below the all-time highs of 303.34. And then you also have this uptrend line on the hourly chart. We've got 3 data points, kind of a cluster here, and then a single data point there. So a break below that as well. So I would be waiting for an impulsive breakdown, reversal candle, some sort of doji candlestick, and then look for confirmation, a confirming candle. So on the daily chart, and obviously if you have a daily breakdown, that's more meaningful than an hourly breakdown. Some sort of a doji reversal candle on the daily, and then a confirming candle, an additional candle on the daily chart, and you have to wait for the close, would likely confirm that this was a meaningful top and we're likely to head lower. SPY, same deal. SPY has negative divergence. It's had it. If I go out to the monthly, There, it will just kind of roll through. You can see here on the monthly, we've got big negative divergence going all the way back to basically back to 2018. And that's just continued to build. So all these new higher prices are divergent highs. Divergences can continue to build and prices can continue to diverge until they don't. So that's why you have to wait for breaks of support, sell signals, things like that. But when you get those key candles, those breakdowns of support, there's no momentum. There's no support. There's no more momentum to carry that. So usually you get, momentum to the downside on those. Also on SPY, here's your 2009 lows on the monthly. We broke that back in 2018, and we've just been backtesting from underneath. So we're coming into resistance, kind of the resistance zone, major resistance zone. This can chop around. This can grind around for a while. We can even recover it slightly and then fail. But we're in the area where we should start to see something if it's going to show up, of course. Flipping over to the weekly. Weekly, there's your negative divergence there on the weekly. Well, we made a new higher price today, and it's on less momentum. So continuing to diverge, telling me that we are likely to get rejected. Here's your daily. Daily also has negative divergence. You can see here we have an equal high in the momentum, and yet we have a new higher price. So if we stop here, then this will be the divergent high. Again, just got to wait for that sell signal. And on the hourly, yeah, not too much on the hourly. It's a kind of an equal. There is negative divergence. It's not much, though. So we'll watch. We'll just wait and watch. Okay, so that's the indices. Let's look at bonds. Here's TLT. This one broke down today. So I don't, what I think's happening is I think we're going to head a little bit lower. Here's what we got on bonds. Let me go to the daily. You have bullish divergence building on the daily. You can see it right there. It's starting to build. But we continued to make new lower lows. So these are all divergent lows. And let me zoom in here. We started to break out. This looked like the breakout, but then it actually failed and has since came back down and recovered back below the price channel. So this divergence might want to continue. We might make a new lower low, maybe coming all the way down to this price channel, 152.50, extending the negative, the bullish divergence. That would be the area where, could be an objective long down there. But as of right now, I'm just kind of sitting on the sidelines watching this one, looking for a better entry. So if it wants to head all the way down to 152, that might be an area I'll take a shot to the long side because you have bullish divergence. And it tells me that that is a divergent low. It's likely to reverse and head up. So watching for that. Let's look at gold. Gold is getting that bounce. A couple things on gold that doesn't make me love this bounce for being the bounce that sticks. On the daily, there's no bullish divergence. You can see here we had momentum heading down there, and price was heading down like that. All right, and then you've got momentum heading up right here, what we've recently done, and then price is moving up right there. So there's no divergence. It's just price is moving with momentum. It has not diverged. But what we could see happen is this gets sold into on gold, and we make a new lower low. Maybe not today, maybe not tomorrow, but soon. And then a new lower low in price, and yet momentum only comes down and doesn't make a new lower low. Then you would have daily bullish divergence. And that could mark a meaningful bottom for this gold sell-off. So again, I've been bearish on gold really since the high up here, expecting it to come down to 1790. You can see we're in that area now. So this is the area that I start to become bullish on gold, and I'm looking to be a buyer and accumulate a large position for potentially the next leg higher. But again, that's a scenario maybe I see playing out as a slightly new lower low, getting us that bullish divergence. If you look at the hourly, we had bullish divergence here on the hourly. We had it a couple times. We had it here. You can see it right there. We started to build, and then we also had it just recently right there. Bullish divergence. You have momentum moving up. Price was moving down. See how price is moving down right there? and momentum was moving up, telling you that a reversal was likely. We now have that reversal, and you can see we from the low we've bounced up about 2-3%. And again, this is gold bullion. We're kind of coming into this zone of resistance. You can see we had lots of reactions where we just traded sideways, kind of in this area. Market, it's about in the area there. All right, gold, Barrett Gold. So I took a long position in this the other day. When we were down here, we've since bounced, pretty good from the lows all the way down here. Really, where I started to build the position was right about here, 22.55. The thing's up line's moving on me. The thing's up about 6%. So I talked about this. I said, look, we could bounce up to this resistance line, $24, and that was about 6%. So this was all, I talked about this trade in prior videos, and it played out exactly as I expected. Now, the thing is, maybe we get a pullback around this area. And the reason why is there's no bullish divergence on the daily. Same as gold bullion, we've got momentum moving down and price moving down, momentum moving up, price moving up. Maybe we come down and make a new marginal low, about, slightly below this 22.50 area, just a new marginal low, and momentum makes doesn't go as low as previously. So maybe it just falls right in here or makes a new higher low, giving you that daily bullish divergence. So I'm watching for that. That would be an area I'd look to be, adding or building a position. XLV. All right. So, but previously it looked like we were bear flagging, but today's price action kind of voids that bear flag. So doesn't mean it's not bearish, just means that we don't have that flag pattern. Previously, I was looking for something like this where you have your flag pull and then you flag out and then you break down. But the break higher kind of voids that. So now we just watch this resistance line right up here. You can see we got rejected again. Here's your hourly chart. We were trading, I've had this marked out. It's been chopping through this line, but again, rejected up here. And so we just watch that. I still think it's bearish in general, but we'll have to watch. We don't have negative divergence on the hourly chart here. That is not really, it's not really there. And then if you look at the daily, we don't quite have it there on the daily either. So we'll have to watch. I took a short on the breakdown right here of 110.33. So I'm down slightly on the position. I'm down about 0.5%. So we'll watch, a recovery of this trend line. I'll probably stop out just to note. But I do, if we continue lower, 97 is my price target. Likely we'll get a sell-off with the other indices. So watch the other indices. That'll probably give you a direction here. This Joe, this is interesting. So we'll have to see what plays out here. I might cut my position. I'm profitable on it. You've got negative divergence here on the daily chart. You can see we put this recent pop here was a divergent high, and now we have negative divergence. The PPO hasn't crossed over yet. You can see the blue line hasn't crossed the orange. So maybe we continue higher, but it's there on the RSI. So something to watch for. And, it is breaking down slightly. But again, you've got support right here at 33.94. So maybe a stop below that is something to watch. One thing that gives me pause against cutting a long position in this commodity, which is Joe, this is coffee, is the dollar. You can see the dollar going to DXY is selling off pretty impulsively. Pretty good sized move today. So the dollar, this is basically why the market's rallying, because the market's priced in dollars and the dollar's losing value. So your stocks go up, but then all the other products get more expensive, and your dollar loses purchasing power. And that's what's happening. So that should be bullish for commodities, and yet as of today, it's not. It is bullish for gold. You can see gold is reacting up almost $40, but some of those ag commodities aren't reacting yet. So again, because the dollar's selling off, I'm gonna give the coffee trade a little bit more room. It is profitable, so I don't need to cut it quite yet. PayPal here, negative divergence continues to build. We can just move it up slightly like that. Negative divergence on the RSI on the daily chart. Negative divergence as well on the PPO. You can see it right there. I can just mark it out, something like that, basically. And then moving into the hourly, negative divergence on the hourly chart as well. So you've got, momentum is fading and price continues to move higher. So again, we just watch for the breakdown. Here's a little trend line. It's making a kind of a secondary trend line. So a break of that, an impulsive breakdown likely will be the sell signal. Also, I'd want to see a breakdown of this 213.14. If you go to the daily here, that's your previous high right there. So a break of that, 213, it's about 213.15, 14, something like that. An impulsive breakdown should be the sell signal that I'm looking for on this. DraftKings, it's in an upward channel. Here's your upward price channel that it's been in. But you've got negative divergence. So you can see it right there. Let me get rid of this one. You can see it on the hourly chart, negative divergence. See how momentum's fading and yet price continues to make kind of new highs. Excuse me. This is actually not a negative divergence. Got to be accurate. This is the negative divergence right there. You can see negative divergence on the hourly. Price in this entire upward channel since about right here has been diverging. So negative divergence builds. This price is moving down and momentum's moving down. So it's starting to confirm. You can also see just recently we're getting this impulsive selling. Buyers come in, but they can't bid it back higher than they're selling. They buy it. It's kind of stepping down. So to me, looks like we're heading down to the bottom of the price channel, somewhere down here around 48.50 or so. Looking at the daily chart, you can see we don't really have negative divergence on the daily. We had it, but and it's continuing. There's your it's not really a divergence because we're still making lower lows. So momentum is a lower low than previous, and so is price. So in general, you can look at this as a kind of a sideways trend to a downtrend because price is, momentum is moving down. So again, in the short term, this is moving up, price is moving up. But if you look back, we've kind of gone sideways. If you scroll back to the if you want to look back years, you're in uptrend, but that doesn't mean that's going to continue. Recently, we've really had kind of the sideways range, little pop, big drop, little kickback rally, but just this big sideways range. Redfin. All right, Redfin is coming into major resistance, and you can see here, here's your trend line. This is where we broke, did a kickback rally, broke, and now we're coming back into that resistance. So we're in the area where it should get rejected. When everybody's looking at one level, and this is the level to watch, up around this 50-50 area, you're either going to overshoot it and then maybe fail, or you're not going to quite get there and you're going to fail. So watch for one of those scenarios. Zoom, pretty impulsive breakdown, and you can see how these negative divergences play out. Momentum really, all this price action up here was divergent highs. So it takes time, for these trades to play out. When you have negative divergence and you start to get the technical breakdowns you're looking for, it takes time for the price to catch up. And so you've got basically negative divergence all through here. We then broke the support right there, headed to the bottom of the channel, kind of hung around this area. It was a battle for a little while. They made it look like it was recovering. Right here, you can see we closed right there. That's a pretty bullish close, and the following day, big gap down and impulsive sell-off. So that's the trap. That's how they do it. They run it up, making it look bullish, and then trap you with a gap down, and they sell it quickly. So it trapped all this latest money, and it, down 14%. I'm not in this trade. I'm not short this trade. But now I think we gap fill down to here. So, a move down to about 325.99. It looks probable. I'll just continue to watch for that. Carvana is interesting. So today we have a divergent high, making a new it's actually there it is, slightly higher, just barely enough energy to move up Look at these candles as well. Big doji candles right there. These are reversal. These are potential topping sticks, and they are, we haven't seen the confirmation yet, but you're getting those dojis. So watch for watch for some sort of a sell-off move. And on the daily, you've got negative divergence. It's continued to extend. So divergent high, topping sticks. Looks to me like it wants to break down here, but we need to wait for that breakdown. Also, if you look at the hourly, we had this upward price channel, and it broke here, and all we've been doing is back testing. So back test, kind of looking like another back test. We'll see if it continues higher. But haven't been able to recover this trend line. So I suspect any move higher gets sold into and we move lower. Etsy now has a divergent high. So we're watching for potential breakdown candles here. You can see here, right there, there's your negative divergence on the daily chart where we made a new slightly higher high right here, just marginally higher, and yet it's done on less momentum. So this is set up to break down, and we don't have a breakdown yet. You need some sort of a trigger or sell signal. Going to the hourly can help us refine that. Maybe something like that. A breakdown of about that. It's not the cleanest chart, but I would say right about there. A break. We'll watch this hourly trend line. So a break below this 146, 145, somewhere right around there. An impulsive breakdown and close below that would be your sell signal. Let's look at this Qualcomm trade. Slightly underwater now. I got short right up here. So I'm down about, as of right now, if I can get that, about 2 almost 3%. Well within the parameters of the trade. And it looks like it, here's what the bigger picture on Qs. Daily chart, here's your up channel. And we have negative divergence. It continues to build. So, this new high that we're making kind of today is a divergent high. Here's your negative divergence right there. We just extended out. So, if it wants to run up and hit resistance up around 158 or so, I'll probably add to my short position, and we'll continue to watch this play out. I do suspect, if you want to be conservative, you can wait for the break of this downward channel down here, and that would be a longer term sell signal. But the negative divergence is there on the daily. If I look at the weekly, we don't have it on the weekly, so it's not necessarily going to play out for a huge move, but it is there on the daily. If we look at the hourly, we also we do have it on the hourly right there. So negative divergence is on the hourly right there. So divergent high, basically, any new pop above this 152.78 is likely to be sold into, or in that area at least. BBY, I pointed this one out, and we continue to break down today. So continued selling. First level of support, I think, is right around this 104 area, 104.22 or so. They might step in a little bit early and buy it up, and we get a reaction. Ultimate target for this thing is this gap fill down here, 91.27. So from where we're at down to there is about another 15%. So again, I take profit along the way when you start shorting, and you come into support levels, you can take profit. But there's your ultimate target. And it continues to break down, continues to show downward price action, which is consistent with the negative divergence that was intact. So here's your negative divergence, started to diverge right up in here. This is what it looks like. This is how these play out. You can see that we continued to build, making slightly new highs, and then you break. And then price starts following what momentum was telling you it was going to do. Chewy here on the daily chart, negative divergence right there. Here's your uptrend line. So we just wait for the break of that trend line. That's the sell signal. Right now it's well above there. We continue to diverge. We don't have negative divergence on the hourly. So maybe a slightly new high, putting that hourly, and then we start to move down. But again, the bigger trade, you'd want to wait for a breakdown of this price support here, which right now is about 66 area. It depends on when we actually get down there, or if we get down there. And NEO, you can see NEO starting to break down. Here's your upward price channel right here. and we started to build negative divergence really right here. This was a divergent high. We only had it once, and that was signaling trend change was likely. So then you watch your trend line support right here. There's your impulsive breakdown. That's impulsive. You get a little kickback rally, follow through. So this thing's going lower. High probability this thing's going lower. Well, it looks like we have some support right here at about 44.90 area. So maybe we get a reaction there and bounce up. But ultimately, I think this thing, if you look at the daily, big negative divergence on the daily right there, signaling that it's likely that this thing's going to come down to this more major trend line down here where we have lots of daily closes and reactions. So I think we head down there, and then we'll watch for a break of that. If that breaks, then we've got probably a pretty big trade on our hands, and we potentially can fill this gap down here at $9 or $8. But until we break this trend line, we'll just have to continue to watch. But right now, it looks like it's heading down to the trend line. Even down to the trend line from where we're at is a drop of about 30% or so, depending on when we get there, of course. So again, this trade, this trade's profitable, and I pointed it out a couple days ago. It's up already about 10%. We'll continue to watch the price action. Tesla looks like it's about to break down. A couple things here. Negative divergence on the daily. You can see we just extend it a little bit, but there's your negative divergence. And this is going back to the March lows. We broke this price channel, went sideways. They made another rally and created this other short-term trend line here, and we've now started to break that, and we're just drifting sideways. You look at these candles. There's no more buyers. There's no sellers. We're just drifting sideways, but below this trend. So to me, that tells me this is probably the last gasp. But what I'd like to see is an impulsive sell signal, and until we get that impulsive sell signal, I'm not so sure. Again, on the hourly, you can see we had negative divergence right there. And you can see it, right? It really showed up right about there. So this pop was a divergent high. It's since, has been sold into. So looks like it's about to go. We just need that catalyst to push it over the edge. So we'll watch. Okay, that's all I got. Hopefully that was a lot of detail. Spent a lot of time going through those charts. So if you guys find value in the video, leave me a thumbs up. Leave me a comment below on maybe a stock you want me to look at. And if you haven't already, take my trading course, $99. I'll leave the link in the description below. It really should help you at least hone some of the skills that I use for running technical analysis on charts. Thank you.